Hello, traders. Precisely 1 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the island. It is April 23rd, 2021, and this is the daily report for gold and silver, our weekend review, and an interesting week in that we closed very, very close to Monday's open. However, we did trade to a new high for the third consecutive week, and we can chart the bottom, which is a double bottom of the market, which began in March. That being said, we did see some weakness come in at the end of the month. We pulled profits on our silver trade. We remain long June gold. We'll talk about that in detail when we pull up our technical studies. And also, for those interested in Bitcoin and cryptocurrencies, we saw a ridiculously wild week. And Joseph Wagner, who heads up that department, will have a report at the end of my report. That begins right now. Traders, now for the second consecutive day, we have seen gold pricing basis the most active. June futures contract closed lower. Today down by $5.30, 0.3%. Current fixed price is $1776.70. We remain long from 1740 with our current stop at 1760. Low today, 1769.50. In the middle of the week, we did suggest an alternative strategy, and that strategy was to pull profits if the market tracked as high as approximately 1800 and then began to back off. The market did in fact reach a intra-week high of 1798.50, so there were some of our subscribers that felt comfortable with that strategy, took it, and pulled profits on the trade. As I said, on record, we are long from 1740. Current stop, 1760. For our subscribers that are trading spot or Forex gold, that closed down $6.46. Current fixed price is $1,777.10. We remain long from 1743.21 with our current stop at $1,759. Traders, before we look at a daily chart to look in detail to the week's activity, what we are looking at is a weekly candlestick chart, this of the continuous contract of gold. And we can clearly see that this week was almost a non-event in terms of where the market opened and closed. It is a doji, almost a pure doji, in that the difference between Monday's opening in Australia and Friday's close in New York was roughly about $2, with current pricing at $1776.70. However, the other noteworthy aspect of trading this week is that it did trade to the highest high we have seen since the market reached the second of this double bottom, and this weekly chart illustrates that quite well, with the first bottom occurring roughly the first or second week of March, and the third week of March having the second of these two bottoms. Although it is slightly higher, we can still label and identify those two lows as a pure double bottom. We are looking at a daily candlestick chart and can clearly see that the activity this week began with a lower day on Monday. That is this candle here. That was followed by Tuesday and Wednesday's trading activity, which took it to the intraday high of the week, as well as the intraday high close of the week, and then followed by yesterday's price decline. On a technical basis, what we can say is the following. First of all, we definitely have real resistance in the market based upon the psychological and key level of 1800, which also corresponds to the 100-day moving average, which currently resides at 1802.30. We have had highs that have come close to, but not overtaken that price point, both on Thursday and Wednesday of this week. The second thing we can clearly identify is today's open as well as close broke through what I believe to be a pretty critical level that needed to hold in terms of support, and that is the 38.2% Fibonacci retracement at 1783.50. While we remain long from 1740, today's price decline open and close are signaling the potential for further weakness next week. That on a technical basis. Realize at any point the fundamentals could shift and the market could move back above that. However, all things being equal, if we see a weak open in Australia on Sunday, which is, of course, Monday in the mainland and Hawaii, we will most definitely take our current stop to the market to effectively pull as much profit as possible out of our current trade. If you recall from earlier this week, we presented an alternative strategy, and that strategy was if the market came close to reaching 1800 and then began to falter, effectively take your stop to the market. And some of our traders did do that. Regardless of whether you are long gold right now or pulled profits earlier this week, we will signal your next move on Sunday. For those that remain long, as I said on record, we are long from 1744. Any kind of weakness that comes into the market as it opens up next week would signal the proper action, which is to take your current stop to the market. In terms of our silver positions, our futures position, we were stopped out yesterday, but stopped out with a nice profit. We entered that trade at 25.21. Our stop was effectively hit at 26.20 yesterday. Our profit was $4,450 per Comex contract. We'll look at that in detail when we pull up our technical studies. In terms of our spot or Forex position, if you look at today's low, that is at 2585.4. We had a stop set in our Forex trade at 25.87, so we were effectively stopped out, but stopped out in a profit. We'll talk about that in detail also when we pull up our technical studies. Lastly, for those trading the iShares Silver Trust, that closed down about 7 cents at $24.14 per share. The low today, $23.98. And the reason that is so important is our current stop in the market, which resides at $23.97, 1 penny below the actual low of today. You remain long SLV if you took that recommendation. Traders, we are looking at a daily continuous contract of the May contract now in silver. If you recall from yesterday's show, we entered a long trade back on the 6th day of April. We got in at $25.21, and you can clearly see that on this chart as a yellow arrow. I'm going to overlay that with a cyan. That is this candle right here. Market moved up. We raised our stops on a couple occasions, with the most current stop being placed at $26.20. That was hit yesterday when market forces took it right below that. We got in at 25.21. We got out at 26.20 for a profit of $4,450 per contract. We are still trading above the 50-day moving average, but we have broken below the 50% retracement level. Traders, we will remain flat with no active trades in silver futures or Forex. In the case of Forex, we were stopped out today in a profit. We went long our Forex position at 25.15, and we were stopped out at 25.87, which resulted in a gain of 72 cents per ounce. Traders, maintain your current neutral stance. In silver, futures, and Forex, remain long SLV. Remain long your June gold position. Our weekly Bitcoin review begins now.
Bitcoin, as well as cryptocurrencies as a whole, had a rather rough week. Bitcoin futures traded down approximately 18% on the week. As we spoke about last week when we identified a shooting star candle on a weekly candlestick chart, we mentioned how that could be signaling a possible top in the market, and indeed it did. You can see our trend lines that we drone in and how we broke sharply below that at the start of this week. We have hit a level of what could be temporary or it could be strong support. We'll have to really see next week, and that is based on two older data sets that we had used and a fib harmonics that occurs roughly at 50,000 50,900 to 50,600. You can see that the market traded sharply below it today, but did recover, closing right at this support area. If we do see the decline continue next week, we could look to roughly $42,350 for an area of major support made up by the 100-day moving average. We did incur a small loss this week when our stop was hit on Monday for a loss of approximately $1,500 per coin. Traders should now be actively flat the market, but we are looking to possibly sell if we see continued downside pressure on Monday.
This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.